Hello, welcome. I'm so glad you are here, and I hope you're having a great summer. Today, I want to share with you, it's actually an article that I wrote, but the topic is about the child and dependent care tax credit. This credit has been around for a long time. It changed a little bit during COVID. They expanded it for 1 year for 2021, but now it is back to its original form. So because there have been some shifts in the child and dependent care credit, I thought I would read you an article that I have written that I actually wrote originally in 2016, although I've revised and updated it every year since then. I thought I would read you this article because one of the parts of the child and dependent care credit is that it includes summer camp. So I like to release this episode in the summer so that you know how the rules work as you are as it's top of mind, and you might have kids and be paying for summer camp so that you can go to work, whether that is your own business or whether you work somewhere. So before I start reading this article to you here on the podcast, I just want to clarify one thing, which is that the child and dependent care tax credit is different from the child credit. Okay, there's a child tax credit, which is something entirely different. Okay, so that is a bigger and even more generous tax credit. And I may do an episode on that in the future. But for the moment, what I'm talking about is the child and dependent care tax credit. This is the tax credit that is for paying for childcare so you can work. Okay, this is for young kids 12 and under. All right. Okay, so as a parent, I find this one to be critical. Sunlight tax would not exist without childcare because I would not be able to get anything done, especially tax work where I'm reading tax law. I'm doing really detailed sort of no mistake zone kind of things that I cannot multitask. So I can only do this work because my children are busy somewhere else. So to all you parents out there, this episode is for you. All right, I'm going to read you this article. This article originally appeared in Art F City. If you don't know Art F City, it is a blog that was started by my dear friend and colleague, Patty Johnston. Workshop is her company, Network is her program for mid-career artists who want to get more shows. So I'll put a link in the show notes to Patty's program to see what Patty is up to now, but she got famous. Patty got her fame by being one of the OGs of blogging, and she had the original Art World blog. So she is an art critic and now a helper of artists, and she's really wonderful. And she was my editor for many years, and I was a columnist for her blog, Art F City. So I owe a lot to Patty, and over the years we have developed a friendship, and I just love her work. So thank you, Patty, for originally hosting this article on your blog. All right, here it is. It's called Summer Camp, a break for taxes and parental sanity. All right. I'm taking a summertime break from my normal sunlight tax duties in order to direct the summer programming at Camp Mom. In the meantime, in honor of all the working artist parents out there, here's a post on the tax credit that applies to summer camp. As any parent of young kids knows, juggling work and childcare is hard, and paid childcare is impossibly expensive. Many budget-conscious, self-employed parents who manage to fit their work into school-time hours and avoid babysitters and after-school care simply don't have that option come summertime. Here's some good news. If you pay to send your child to summer camp so that you can go to work, that camp expense qualifies for the child and dependent care tax credit. In March 2021, the child and dependent care tax credit was expanded temporarily, and that expansion was only good for 1 year. So I'm going to guide you through where the credit is now. So what is the child and dependent tax care credit? The child and dependent care tax credit. It's a credit meant to help working parents with the cost of childcare that enables them to work or to look for work. Depending on your income and how much you spend on childcare, the child tax care the child care tax credit allows you to take between 20 and 35% of your child care expenses, up to $3,000 of expenses for one child, or up to $6,000 for 2 or more children as a tax credit. The percentage of childcare costs that you are allowed depends on your income, with taxpayers' adjusted gross incomes over $43,000 being eligible for the 20% credit amount. In other words, if you earn over $43,000, you get 20% of the cost of your childcare, up to $3,000 for one kid or $6,000 for 2 kids, back to you as a tax credit. Okay. And if you earn less than $43,000, between $43,000 and $0, although you need to earn some income in order for this credit to kick in. So if you earn under $43,000, then the amount of credit you get is a higher percentage. So between 20%, and it tops out at 35%. There is no income limit to this credit. So you can make any amount of money and still get the credit, but it's going to be at 20% of your spending amount. Okay. This tax credit applies to a host of scenarios and is relatively generous. Because it's a tax credit rather than a deduction, it saves you a lot more money. So let's review the basics of why a tax credit is better than a tax deduction. A tax deduction means that you may subtract the expense from your taxable income. So if you had $50,000 of income and had a $1,000 tax deduction, you would now have a taxable income of $49,000. In other words, $50,000 of income minus $1,000 of your deduction. If you were taxed at an effective tax rate of 25%, that means that your tax due would drop from $12,500, which is $50,000 times 25%, to $12,250, which is $49,000 income times 25%. In other words, you would save $250. Which is $12,500 minus $12,250. Deductions lower your taxes by reducing your taxable income. But compare that to a $1,000 tax credit. A tax credit lowers your tax due, not just your taxable income, dollar for dollar. If you make the same $50,000 of taxable income and are taxed at the same 25% effective tax rate, then your tax due is $12,500. So the same, right? $50,000 times 25% tax rate. A $1,000 tax credit reduces your tax due to $11,500. To $11,500. $12,500 tax due minus $1,000 tax credit. So the $1,000 tax deduction saves you $250, but the $1,000 tax credit saves you $1,000. That is a much bigger impact. There's one more wrinkle from 2021 to iron out, which is that some tax credits are refundable. When you have a fully refundable tax credit, the earned income tax credit is an example of one of these. If your tax credit reduces your tax liability past zero, in other words, you don't have any more taxes that you owe to be reduced, the government will actually send you a refund for the remainder. In other words, if you owe $0 in tax and you get a $1,000 refundable tax credit, you will get $1,000 back from the IRS in the form of a refund. A non-refundable tax credit can reduce your tax due down to zero, but if it goes past zero, you lose the rest of the credit. The Child Independent Care Credit was made fully refundable for tax year 2021, but is now non-refundable once again. So originally it was non-refundable, and now it's back to being non-refundable. So in other words, the Child Independent Care Credit was made refundable for 1 year only, 2021, and is now non-refundable, as it has been in most normal years. To take the Child Independent Care Tax Credit for your kids' summer camp expenses, here's what you need to know. The credit is based on the first $3,000 of camp or care expense for your first child, or on your first $6,000 for 2 or more children. If you spend more than that, and if you're like me and many other working parents, you probably will, you aren't going to get any additional tax benefit. This limit is a combined total, so it's fine to add up multiple camps or camp plus a school year after school program, babysitter, or regular full or part-time childcare. It is only for children under age 13 or dependents of any age who can't care for themselves, such as an infirm or disabled parent or adult child under your care. Although I'm writing about this credit in the context of summer camp, you should know that all of these kinds of care qualify equally for the credit. Daycare, after-school care, babysitters, provided the babysitter isn't your spouse or your child, stepchild, or anyone that you claim as a dependent on your tax return. Note that this is only for babysitting that allows you to go to work or to look for work. Date night does not qualify. In-home assistance for a member of your family unable to care for himself, including a spouse. These kinds of expenses don't qualify. Tutoring, private kindergarten or private grade school, or overnight camp. And this is what you will need to apply for the credit. You need to record the name, address, and taxpayer ID number, a social security number or a TIN for an individual, or an employer ID number, EIN, for a business, of the care provider on your tax forms. You will need to ask the camp or the babysitter for this info. You must be paying for the summer camp or other care so that you can work or look for work. You also qualify for the credit if you're a full-time student for 5 months or more of the tax year. Both spouses must earn income or be a full-time student or looking for work in order to take the credit. Unemployment income does not count as earned income for the purposes of this credit. If you're married, you must file a joint tax return. You can't file married filing separate to get this credit. The Child Independent Care Tax Credit is a comprehensive and helpful tax credit. Take advantage of it and enjoy your summer. That's all I've got for you today. Thanks for listening. Bye. Thank you for watching. If you like this video, be sure to like, leave a comment, and subscribe to my channel. I'm so grateful for that. This video is for education and entertainment only. Nothing in this episode should be taken as individual tax or financial advice. You can find all the tools, books, and links I reference at sunlighttax.com/podcast.